What's up, guys? I haven't done one of these in a while, so I figured I'd just pop on and do a quick overview of what I'm looking for at Bitcoin and what I'm sort of thinking, about where the market's going, because right now it's looking pretty horrific. Nothing that has broken any of my charts as of yet, like my zones. I did try a leveraged long coming down here, but I got stopped out last night, which is fine. It was a really small position. I wasn't that bothered. I'm still in a margin position, from this zone coming in here. And if you're on the Discord channel, you'll see that zone still listed and still sort of active. And there's no reason why it should be broken yet. But these are really the two zones I'm looking for, and I'll just talk a bit more like fundamentals as well. So, technically from a technical standpoint, just as bullish, I'm just quite bullish in general. So for me, I didn't think the zone still, not sure, I'm still pretty high probability this won't break, but I still think my initial zone, I've been buying like spot from 8 downwards really, and leveraged. I was only really interested in getting a leveraged position here, like a significant leverage. This was like 2x, 3x. That's nothing. On such a small position as well, it was really a small loss to take. But so I'm still looking at this side, and it's worth noting, like something that you'll notice in markets is that you really, in order for the market to get a direction, it really has to penetrate the liquidity. So it's just like, say, if there is, well, it's hard to think of an example really. But if you just imagine in this zone I've drawn here, there's buy orders, like large amounts of buy orders placed all the way down. And if you look, we only really penetrated the top. I mean, what would you call it? 20% maybe, top 15% of that sort of liquidity zone. So if you imagine, 15% of a market turning point, I wouldn't say, like when I said in the Discord, like we didn't really penetrate my zone too much. So, I wouldn't be surprised to see it come down a bit more and test, which is what it's doing. But then we also had that China news coming out saying that they were bullish on cryptocurrencies. Can't remember exactly what it was talking about, and that really, because we tapped into that area, you've got these big institutional people sort of thinking, as well as mostly retail, I imagine, because just the nature of it. But we're getting down to a price level now where it's attractive for long-term investors. We're at the 618 of this whole sort of retracement. Oh, sorry, they're at the 618 of this whole retracement. So we're really getting to buying. It touched it. It didn't even touch it. The 618 from the bottom, unless I'm sort of drawing that wrong. But we'll get, from the 618 to 78. This is where you'll see industry people sort of stepping in and being like, okay, I'm a long-term investor. This is a nice price level given its history. So, coming into this zone, any sort of bullish news is really going to push it past. Honestly, I was like, wow. I mean, I don't know what percentage it was. I was in a position. I got out way before it reached the top. I think I was out by was like 9K, and it pushed up to 10.4, which is seriously 41%. Yeah, so a 40% price increase. I mean, that's crazy. So I was like, okay, the probability, the fact that we've touched this zone and we've had such a 40% price move out of the zone, for me, the probability was there to take that long on the retracement coming down here, which, as you've seen, it's obviously failed. I've been stopped out, but again, it's all about probabilities. And for me, I was like, okay, we've pierced my liquidity zone, even though I wasn't that happy with the puncture, and then we've got the strong China news pushing us up to 40%. It's a pretty reasonable trade to take. The long from here to see that sort of head and shoulders form, which still could form, but I highly doubt it just because of the price action. If a head and shoulders was going to start forming here, it really would have started forming a bit further up, and we would have seen like a spike come in, like showing buyers interest near this zone. We've seen a spike, sort of sell off, come back down and then everyone would sort of step in. You'd see it push back up, but we have seen nothing. Like this is slow bleeding into a very low demand area apparently. So I'm not really going to want to see any big spikes until we're sort of deeper into this pool. But looking forward, what I'm trading right now is, I'm still in a leverage position from here. I did take profits out around 9K, but is in a spot position. I'm still in that position. So coming into this zone, I'm still interested in getting in. I'm already in. I still have orders from my last thing, and my stop covers this zone anyway, because it's quite a long-term time frame trade for me. I want to be taking out profits at the top here, middle here, and coming from the all-time high. I might be in this position for 7, 8 months, maybe a year, but I mean, for Christ's sake, you're near the. I will happily say the Bitcoin, you know, cyclical market bottom. It's quite. We might trade to 5K. I doubt it, but for me, getting in long here or long here, the payoff for that is just it's huge. So, I'm still interested in getting a leverage position here. And if I talk more about this zone, if we keep it really simple, and this is why sometimes you can get so overcomplicated in markets. And if you think about the simple 618 retrace to confirm a bullish direction, okay, so what we had here, okay, this is going to seem quite contrarian, but if I do this from the whole market tracement, we went for the 618, okay, and then this is where we saw the strongest reaction to change the trend. So for a lot of trend traders, a strong rejection from the 618 mean continued bearish trend, but for me, just because of the way I view it, I'm just going to play that simple 618 trade. 618 of this situation is here, 726. So that's really where I'm playing it simple. Just my stop covers the 786 anyway. So if we trade down there, it's all right. Obviously, if we break lower, if we break below, if we break below 6K, we will see new lows. This is the highest demand zone for any investor, retail or institutional. Like buying below here, you're just gambling, really. Trading technically and fundamentals included, you'd want to be buying here, really. And then if we break there, then this is really a great price to buy. If we break below 6K, I'll be stopped out on all my positions. I wouldn't want to be buying until I see this sort of low be confirmed. I wouldn't be in the market at all, really. Even going short, because we'd be so near the bottom. Oops. But if I come in and put some Fibonacci extensions, most of these are invalidated now just because we've broken them. But if we look where the market was sort of aiming for when we made this first low here in July, so if we come back up the top here, we get the Fib extensions. We got like 1.618 in this zone, which is I already targeted this zone months before. We come in again, take this low here made in late July or early August, and come up to the top here. We see another 1.618 coming into here. You see, do it from the bottom here. Got like 2.618 sort of lining up here. So again, what is this? 3 months of ranging. So 3 months of ranging formed 3 Fibonacci extensions, as well as a 618 extension from the whole move up, as well as the 2.36 from the bear market. For me, that's a no-brainer long. It's still a no-brainer long, like even with this low being penetrated here. So again, I wouldn't be surprised to see these tested, sort of coming into the low end of it, 6.8, before we see a sort of a strong wick change. So for me, again, I play probabilities. That's how you trade. For me to see, a break of it would be a surprise. And we've also got these trend lines coming here. This one is the most important, really. Coming in from these 2 lows. This was the first high low made in February, and then but the second high low made in March. If we connect those two, then this is coming in here. We're getting extremely close, but that's also where the 2.618 is. It's also connected to this zone as well. So I still, I wouldn't be surprised. The thing with this now is you'd really want to be in a position and waiting to get filled on more. You wouldn't be like, oh, okay, I'm going to trade the double bottom here and get in here again, because really the probability of you accurately predicting a double bottom is just, it's so low. Like, I'm sure if you get the statistics up, I have the statistic, like if I really wanted to, if you get the book on technical analysis, it shows you the statistics on coming back from 2012, I think, going back to 1960s. You can see the statistics of market, like technical patterns playing out, to predict a double bottom is just, it's so it's so low probability. So just never trade like that. Never take the same trade twice, and that's why double bottoms are some of the most unexpected, because you wouldn't expect people to be going long in the same place again. You'll always usually see a higher low formed like here, because by the time sort of people have got in and it's come back down, people realize, oh, okay, this is it. The 618 retrace can be it. So you step in, and then if there's enough interest, that changes the trend. You don't usually see it come back to the same point, because it's, I guess news can create double bottoms, fundamental reasons, but you never really see it done, normally, I feel. Yeah, that's just some like fundamental analysis. And as well, if we talk about the stock market, so the S&P is still going. It's had a bit of a sell-off today, which is the 21st of November. But, that's looks like it has, it's not slowing down anytime soon. It's just pierced a pretty important resistance zone around 100 to 130, and it's sold off. But I already had two ideas. It's either going to get to that zone and it's going to sell off, have a bit of retracement, or it's just going to go straight to 3,300, which is really my top target, which has been since like April last year, no, this year, sorry. If that's still going, we've also got holiday earnings coming up, and the way the stock market looks, I mean, it's at all-time highs, and what that means is that, people have made a lot of money in this run. They've got a lot of money for this Christmas, so I wouldn't be surprised to see the S&P push further and really push Bitcoin lower. Again, Bitcoin's a reserve currency, just like gold, so they're not correlated, gold and Bitcoin, but you'll see that the trends are quite similar and quite cyclically the same. Although fair enough, gold is a way bigger market cap, and which means it's less volatile. So, the stock market, I don't see it slowing down until March, February, near the elections. I don't see any big crashes or anything like that until, early next year. Until then, I imagine the stock market will just keep sort of slowly gliding up by the Fed printing too many dollars, and holiday earnings helping push it up. So that was just a quick video on Bitcoin, and I'll see you guys later.